So the silver squeeze, which created a massive Monday, turned into a massive bust on Tuesday, and that's it. It's over now. So silver is no longer on the radar screen of the Reddit traders.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update, and with us today is John Rubino from DollarCollapse.com. John, thank you so much for joining us today.
Hey Elijah, so you guys at Miles Franklin survived this week, did you? Must have been an exciting time.
Yeah, definitely. Us, as well as a whole lot of other bullion dealers, had to actually shut down on Saturday. But, we're back open. We have product. But seriously, this has been the busiest time in all the 30 years Miles Franklin has been in business. This is the most demand we've seen. And what's interesting is a lot of it is from new buyers who haven't invested in precious metals before and are jumping in now. What is your perspective on this whole hashtag silver squeeze phenomenon that we've been seeing? Really, it seems like kind of started Wednesday, but really over the weekend took off.
Well, you have to go back to the Reddit traders and Robinhood and everything to understand what happened, because basically millennials discovered this free stock trading app called Robinhood. And then we locked them in their houses because of the pandemic. And then we sent them free money because of the lockdown effects on the economy. So these are, gamers, lifelong gamers who discovered a new game and were staked by the government while being forced to stay inside all day long. So they became high-powered day traders. Day traders have always been around, and in bubbles, they become more prominent. But this class of day traders puts all the previous classes of day traders to shame. So they were causing all kinds of little story stocks just to rocket, starting with Hertz, which was bankrupt back 6 months or 8 months or whenever it was ago. And the Robinhood day traders bid that stock up through the roof, even though its stock was literally legally worthless. And so this went on, and they gained more and more confidence, and they just sent a bunch of different stocks through the roof, including GameStop, which became the big media sensation part of this story. And then they turned their attention to silver. Because silver is it's a logical next step if you're a powerful group of hundreds of thousands of day traders who are starting to feel omnipotent, right? Because it's a relatively small market in the metals world. It's blatantly manipulated and has been for a long time. So it looked like that they were going to do to silver what they did to GameStop, or at least try to. But as the silver squeeze got going, and basically the goal of the silver squeeze was to cause a huge demand for physical silver, which would cause the COMEX, where physical silver is traded, along with futures contracts, to go bust and default, and that would cause an even bigger squeeze in silver, and the original people who bought in this process would make huge multiples of what they bought in at. That's what they were hoping for. But just as the silver squeeze got started, the government and Wall Street cracked down on the Reddit traders. They basically went in and said, okay, you can sell GameStop and these other stocks that you bid up, but you can't buy anymore, right? And then meanwhile, we're going to let the hedge funds who were short, who you were crushing, sell as much as they want to. Now, this sounds blatantly unconstitutional, and there's a class action lawsuit in train that might sort this out, but nowhere nearly in time to save the Reddit traders who got crushed. Some of them lost millions of dollars, and one lost something like $20 million in the GameStop collapse. And that kind of took the wind out of their sails. All of a sudden, they realized they were vulnerable to the action of Wall Street brokerage houses and potentially the government. So the silver squeeze, which created a massive Monday, turned into a massive bust on Tuesday, and that's it. It's over now. So silver is no longer on the radar screen of the Reddit traders, and they're going after small cap biotechs right now, according to my son, who's one of them. And so the small cap biotech stocks are rocking, but that's a place where there's very little regulation, very little hedge fund, short interest or anything. So it's not some place where they're liable to get smacked back down again anytime soon. So silver is done as far as being a target of the millennial day traders, which leaves it with what it had before, which was a spectacular long-term prospect. Because silver basically wins twice in this world. One is as a monetary metal, the governments of the world are racking up debts that are just off the charts crazy. I mean, what we did in the last 20 years was crazy. This needs a new word to describe how far beyond crazy it is, what we're doing financially right now. And that's going to affect the big fiat currencies in a negative way, which will be great for the monetary metals. So silver wins that way. But we're also moving into clean tech in a big way, which means the demand for the components of electric cars and solar panels, among other things, is set to go through the roof. And there are a lot of analyses out there showing that it's not possible to go to an all-electric car fleet because we will just flat out run out of cobalt and copper and a bunch of other things, including silver. So what it looks like we're going to do is try to go to an all-electric car fleet and then find out that we just don't have enough of the components for the batteries and all the electronics in these cars along the way, because the prices of those things are soaring. So even in the absence of a monetary crisis, our move to basically a clean tech electrified economy would be phenomenal for silver. It would send it through the roof because we would run out of silver if we tried to put solar panels on every roof and an electric car in every garage. So silver wins either way in this world. And both of those things look highly likely. I mean, it's clearly likely that we're going to destroy the major fiat currencies and give ourselves a big currency crisis out there somewhere in the future. And it's clear that we're going to try to go all electric in the economy. That process could be slowed down by a currency crisis / stock market crisis, but it won't be stopped because those technologies have arrived. Everybody wants an electric car because they're just much cooler than gas-powered cars. And everybody wants solar panels now that they're so cheap that the electricity they generate is actually cheaper than what your utility can sell you electricity at. So it's going to happen. All of this stuff that we're talking about is going to happen, and basically all of it is good for silver. So we just have to wait for that perception to become the conventional wisdom in the markets.
Now, with respect to this silver squeeze, as it's called, kind of being over, what is your perspective? How, here at Miles Franklin, we're still seeing extreme demand, so it seems like for the physical metal, there's still a lot of demand out there. So do you still, I guess, given that, why do you think that this push towards buying silver is over?
Well, I don't think it's over, but I think the active attempt at engineering a short squeeze on the part of Reddit traders is over. One of the really nice side effects of this whole thing, though, is that hundreds of thousands of traders out there had to educate themselves about what silver is in order to participate in an engineered short squeeze, right? So they had to, first of all, learn about fiat currencies and then learn about monetary metals and why silver would tend to go up in the kind of mess that we're creating. And then they had to figure out that physical silver is the way you bring about the short squeeze, that it's the paper markets that are manipulating silver, and that to the extent that you buy silver and take it off the market, that helps bring things back into balance. In other words, it helps physical become the determinant of the price out there. So a lot of people learned those lessons and they found it interesting. They like the story of silver, even though they're not part of a gang that's trying to engineer changes in the silver market. So I think what we've done with this short squeeze is educate a new generation of precious metals investors, physical precious metals investors. And by the way, so did what happened with cryptos in the last couple of years. With Bitcoin soaring, the story of fiat currencies versus safe haven assets got told all over the place to people who never might never have heard it otherwise. So we've created a whole new generation of gold bugs, in effect, people who get it, who get the idea of safe haven assets in an inflationary world and are open to owning not just Bitcoin and not just Ethereum, but also gold and silver, and who understand that you want to do it physically rather than via the paper markets, because the paper markets are corrupt and the physical markets tell the truth. So these people who are, they have a moral sense in all of this too. So the moral idea of truthful money resonates with them, as well as the fact that they will make a lot of money if they're in these markets. So I think all of this was to the good the last couple of years. Chaos, or chaotic and crazy as it was, it educated a whole new generation of gold bugs and silver bugs.
I think one of the things that really hits home is that, the fundamentals for silver haven't changed with regard to all of this. So regardless of regardless of what has happened over the last, week or so, regardless of this silver squeeze, whether it was a good thing or bad thing, it's like there are still really, really good reasons to invest in silver right now.
Oh, yeah. Yeah. The silver story was always excellent, and that's part of why it came to the attention of Redditors. And, the story lives on after the Reddit short squeeze attempt came and went. So, yeah, there's no reason not to think that silver is going to be a good investment. It was, in 2020, it was the second best thing to own behind Bitcoin. And this year, it's very reasonable to expect it to move upward from here. So we could see $30, $35 silver in just a kind of a boring trading market here, where it goes up to 31 and then down to 26 and then up to 33 and then down to 28, that kind of thing. That doesn't seem like it's much of anything, but we could easily end up at 35 at the end of the year. And that's I would call that almost the worst case scenario, because there are a lot of better scenarios for silver where things get really crazy out there. All this debt starts to bite and interest rates start to get volatile, and governments respond to, say, rising yields on the 10-year treasury, or a recession in the first quarter of this year with even more money created out of thin air and dumped into the system, because that's going to be basically the story of forever until the fiat currency system breaks, is crises of rising amplitude combated with ever increasing amounts of new currency just created out of thin air and dumped into the market. At some point, something comes along that can't be papered over and it all breaks. But in the meantime, we have these booms and busts that cause gold and silver to go up during the boom part even more than they did in the previous boom. And so that's a good long-term prospect for a market. If you're going to be the beneficiary of ever-increasing volatility, and it's government policy to increase that volatility, then you might as well just, do like traders like to say, be long and strong. Just continue to stack. Don't worry about short-term corrections, because they'll be followed by government policy that leads to ever higher prices. So just let it happen. Dollar cost average, when silver is down like it is today, buy a little more than, or buy the same amount in dollars, which gives you a few more ounces, and just let that process play out. It's going to work out in the end, and possibly sooner, but if not sooner, then eventually.
And you've mentioned before that there are a lot of bubbles in the markets right now. How, look at the stock market, the PE ratios are just, they're the highest they've been since the, 2008 crisis. And yeah, I guess with this Reddit phenomenon that you've also said is uncharted territory, how does this phenomenon really impact going forward? That look at the markets. A lot of them are in bubbles right now. The stock market, you've mentioned the bond market, and other markets seem to be really in a bubble right now. How is this Reddit phenomenon going to impact that?
Well, you have to understand that this is a unique time, because previous bubbles, big as they were just sector specific. You had a junk bond bubble in the 1980s, and tech stocks in the 1990s, and housing in the 2000s. They were pretty much limited to one sector. When they burst, they still almost blew up the whole economy, but still they were kind of narrowly focused. This bubble, people call it the everything bubble now, because it's not just any one thing. As you said, stocks are now as overvalued as they've ever been before. There's a thing called the Buffett indicator, which Warren Buffett likes to use, which is equity market cap or market values in the aggregate in the US compared to GDP. We're the highest we've ever been. Stocks have never been more richly valued in relation to the size of the economy than they are right now. We also have more stocks trading at 10 times sales or higher, which is a really high valuation, than we had during the tech stock bubble of the 1990s. We've got house prices now higher than they were in 2006. Bond yields, which is to say bond prices, because they're the reciprocal of each other, are now in bubble territory in a way that has never happened before. We've got cryptos coming out of nowhere, and not just Bitcoin is way up, but a bunch of other cryptocurrencies are through the roof. They actually look like the dot-com bubble, with Bitcoin playing Amazon and all the other little cryptos playing the smaller dot-coms, just soaring more quickly than Bitcoin in percentage terms. And it goes on and on. Everywhere you look, there's some gigantic bubble. So the question this time is, if we barely got through the bursting of these previous bubbles, how do we get through the bursting of 5 bubbles, each of which is as big as the dot-com bubble, all at once? Because when they burst, they will burst all at once. It's not going to be one bubble continuing to expand while all these other ones just destroy their sectors of the economy. Bubbles burst. When they reach a certain point, there's nothing you can do to stop them from bursting. And we're there with, let's say, 5 different bubbles. So sometime in the next year, 2 years, 3 years, 4 years, who knows, but soon, relatively soon, that's going to happen. Now, the Reddit thing is just one of those things you see at the peaks of bubbles, because one of the ways you're in a bubble, it's not just prices. It's when regular people start making huge amounts of money doing things that the experts used to think of as really hard, and speculating in stocks and engineering short squeezes and things like that. That's hedge fund level sophistication there. You don't just get out of high school and start doing stuff like that. But we've got hundreds of thousands of people who are now in that boat. They're college kids, they're high school graduates. They may have never seen a market besides this one this year, and they're making huge amounts of money by speculating on little stocks. This morning it's like I said, the junior biotech stocks that are soaring. Well, there are Reddit traders making huge amounts of money, and you know what? That's a hard thing to do, even if you're a hedge fund manager with a Harvard MBA and 30 years of trading under your belt. But regular people are doing that. So that's the import of the Reddit phenomenon now. It illustrates how crazy this world is and how fragile financially we are, that small traders can have such a big impact. So, again, wherever you look, you see signs of the end times about to happen. And I think the biggest play in one of these years is going to be The Big Short again. Watch the movie The Big Short. See what they did. They identified a bubble market, bet against it, suffered because they were too early, and then in the end won some order of magnitude more money than they went in with. That's going to happen next, and it's going to be made by shorting bonds and or shorting tech stocks and or shorting the housing market in some way or shorting cryptos in some way. It's going to be on the short side. And it's a target-rich environment right now for that kind of thing. So we will see, what the epicenter of the next big short is. But there are a lot of candidates right now, and so there's a lot of money to be made. There are going to be, not billions, but hundreds of billions of dollars made by individual hedge funds who get this right.
All right. Well, John Rubino, very interesting times. Thank you so much for joining us today and sharing your insights. Before we let you go, any last thoughts you'd like to add, and where can people find you online?
Yeah, I run dollarcollapse.com. And, one thing I would like to plug is that, it really is time to ditch corporate social media. So we're moving from Facebook over to MeWe. So there's now a dollarcollapse.com page on MeWe and a Dollar Collapse group. And you can go over there and join and then be part of the conversation in a place where you don't get censored, at least not very much, and you don't get spied on, and your information isn't used for nefarious things. So come join us over there, and we'll together we'll watch how this all plays out in the next few years.
Definitely, and in the comments, definitely comment, is your thoughts on what are all your thoughts on what's going on right now, the silver squeeze phenomenon, the Reddit phenomenon? Just put your opinions in the comments below. And once again, John, thank you so much for joining us today.
Thanks, Elijah. See ya.